G'day all, Ben here from East West. Just going to have a look at gold and silver. Sorry I didn't get around to it last week. A fair bit's happened since last we spoke. The Fed went 50, which caught me by surprise. I was pretty adamant that they would only go 25. So I don't know what gives there, but they did. I just deal with that. I was wrong. I move on. So let's just see what we can see across gold and silver. So the one big thing we had out here, of course, was the core PCE. So that was a little bit weaker than expected. Now that's pretty important. Not that inflation wasn't already moving into the background in terms of the Fed's thinking, but this just solidifies it even further. So it just keeps the rate cuts, which were already front and center, even more front and center, in my opinion. That will keep the US dollar under pressure. Should help gold and silver. Just quickly looking at the dollar index, there's not much to really gain here. Insights to be gained into the US dollar at the moment. When you're talking about the dollar index, I think it's getting pulled two ways. It's getting pulled up by the predicament that Europe's in, which is terrible. So, ECB cuts, they could outpace the Fed because they've got trouble in Europe. But on the other hand, you've got the yen, which of course had a big move yesterday on Friday day my session, or Thursday night for my Northern Hemisphere friends. There was a Japanese election, even though it didn't, the Prime Minister of Japan, I wouldn't have said has got a great bearing on what the BOJ do. But certainly there was speculation mounting that the new Prime Minister was against any more hikes. She lost. Okay, she did not win. She did not prevail. The more hawkish Prime Minister prevailed, and that is why the US dollar against the yen suffered, because the yen rallied quite strongly. Whereas when we're looking at the euro, you can see now that it is really starting to struggle. Pardon me, in this area here, just sort of above, well, you call it just around that sort of 112 area. It does not want to go any further for now. And the other thing you've got to be careful of here is now you're getting some pretty stark divergence in the tops. So the point here being the opposing forces of the yen and the euro are, pulling the dollar index, from two different directions. I think that's why you're seeing so much chop and why it's maintaining this range. I still think eventually it's going to get through that 100. It's just a matter of time. But the point here is that I don't think this is giving us any sort of clear signpost that we can lean into in terms of any sort of potential directional bias for the metals. So obviously, a fair bit of water's gone under the bridge since last we spoke, especially when it comes to gold. So we were looking at this range in here, and we blew up, and we quickly got to the top of that range before we corrected, and then we've gotten beyond 200% expansion of this range, and we did it in a very quick time. So what comes next? Well, there's a couple of warning signs creeping in. Obviously, this one, the fact that we're starting to get a bit hot here, and the rally is just starting to fade, which is not unexpected. This is, you're in blue sky territory up around that 2700 area. Now, I think I flagged this area as a potential target for this run. Reason being, I think that I was always sort of looking at this correction being some sort of triangle, and it was about the 1, the 2, even though I've sort of abandoned the Elliott case to a degree because I think the structure in here is terrible. I'm not sure how you go about trying to put it together. But I can lean into the principles of Elliott. And, this projection work is what you sort of got to do when there's nothing to look left on. There's no structure to go back and look at for reference because it's blue sky. So we take the first movement, the corrective movement, and this becomes the target zone. And I'm pretty sure I've said that before, that this would be the sort of area I was looking for. And that is where we've got to. That's not to say that it won't go further. Okay, I think it probably, over the coming weeks and months, I think it probably will. All right, but in terms of Elliott, this is kind of how we would put it together. This is the move, the correction, and then the extended move that goes outside of the initial base channel and comes up here to the 161.8%. That's pretty classic. Okay, so buying in here on a trading perspective, I'd be pretty wary. I'm not a buyer here. any sort of potential retracement from here, I'm looking for the RSI to hold 40. Okay. Now, like I said, I'm having a bit of difficulty labeling this up as 1, 2, 3 because the structures in here don't support it because you've got these big overlaps in here. I think that you've got to force fit something in here. But just generally speaking, I'd probably just be taking this low. I'd be looking at that. Okay, so it makes some sense to me that any sort of subsequent correction could come back to test sort of this structure. Because this has just gone up in a straight line. There's been no digestion here. So these are the two options. Either it comes back here and sort of a sharp sort of three-wave movement to come back in and test this before it goes on. That'd be one way it could go. Or the other way I'd be looking for would be more a repeat of this, which is basically just like that. So, that another churning little range before we either go, just grab this, before we either break higher or we fall back down. Okay, my bet would be we're going to keep moving higher as, and maybe it's going to start chopping sideways like this until you get the next Fed meeting, because even though I was completely incorrect in my observation of the Fed, the one thing I read about them going 50, and this is only the third time in history they've kicked off with a 50, mind you, and the last two times they kicked off with a 50 with the GFC and COVID. So what gives? That's kind of what I'm looking at the Fed going, what gives? What do you know that we don't? Are they more worried about things than they're letting on, which would be my read about it? And if that is the case, the market speculation about, so we've done a 50-point cut. We're still beyond 50 more points before the end of the year in terms of pricing. Okay, we're still probably up around 60. I've got to look at the forward curve, but we're probably up around 60 or 70 points. So we're beyond another. So the market is anticipating at least another 50-point cut before the end of the year. If that happens, that is definitely going to be supportive for gold. The point being is maybe we just chop around here like this for a little while as that speculation mounts and we get closer into that Fed meeting before the next big move. So the general takeaway is just be a little bit careful about expecting too much more further upside here. Look, it could, for sure. This could just explode up next week. There's no doubt about it. But this is what I'd be anticipating, either that or something a bit more like this in the red, where we come back here in a bit of a sharper move to 10. The range is probably more likely to, in my eyes, but we will just see what happens. So just quickly dancing over here to silver, same sort of thing, right? So we just did come up here and we wicked into a new all-time high, and then we've just bogged down. So I think we can just get rid of this because they didn't really provide us with a lot. I mean, this sort of area up here just did hold them. I mean, look, you can take that reference point, all right? So, you had all these tops here, and the market did just stop in there briefly, okay, before it just moved up and just touched through the top. So the RSI here has been a little bit slower to react than perhaps the gold, but we are just creeping above 60. So what I would like to see is a more definitive move in this RSI, more like that, where we very easily cleared into the overbought area. And when I say the overbought area, all that means is that the market's got momentum up here, okay? This is just starting to crawl. So in terms of this, we've sort of come up above this base channel, but not in a hugely definitive manner. So, to me, same sort of deal. I mean, it's got the same sort of, the structures aren't quite the same, but you could see here that a correction down into this area would set up things quite nicely in terms of a technical picture. So if we did something along the lines of this, okay, and that would be, the sharper correction, but, you're tying these tops in, all the old resistance, and it did become new support as we touch back down here to act as support again within the main retracement zone, and then we just look for the next move, which would propel us further up, and that would be the short-term target. So that would be... silver, I don't know. I think this is just telling me that it's gassed. It may be more likely that silver corrects in a sharper manner as opposed to gold. So, it might be something less like that and more like that before we move on. We will have to wait and see. But my read on silver, just the way it sits, is I think this looks maybe slightly more likely to happen than this. But who knows? We'll have to wait and see. So look, I'll leave it there. I'm just going to keep these videos brief. I'll leave it there this week. Let's just see how we propel next week. Thanks for watching. See you next time. Bye for now.